It was a day for the dollar, something we haven't seen a whole lot of in recent months, but the buck was bid across the board into the European close, presumably on flight to safety bids in a world where risk sentiment is looking increasingly shaky and global equities look like they could be getting ready to accelerate to the downside. One of the driving forces behind the reversal in stocks has been the onset of monetary policy normalization, and this story comes front and center on Wednesday, with the Fed decision due and the central bank widely expected to raise rates. Higher U.S. rates means yield differentials moving in the dollar's favor, which means flows that are supportive of the buck and not so much supportive of stocks. All of this comes at a time when things have been a little more complicated with respect to forecasting the dollar's trajectory, with U.S. administration protectionism and soft dollar policy responsible for a lot of the dollar declines in recent months. There was some added demand for the buck on Tuesday after Moody's said it expected the Fed to signal 4 rate hikes this year versus the 3 the market is currently pricing. Meanwhile, away from the dollar, the euro was hit on discouraging Eurozone and German ZEW sentiment reads, while the pound eased back after inflation data came in softer than forecast. The New Zealand dollar was the weakest of the developed currencies on Tuesday, with the commodity currency relatively underperforming after the GDT auction result produced its 3rd consecutive negative print. Looking ahead, the FOMC decision will be that big one on Wednesday, but we also get some important earnings data out of the UK and US existing home sales. That's all for now.